A few years ago, most people had never heard of Bitcoin. Now it's on the news, in ads, and in casual conversations. You hear stories of people getting rich overnight. You also hear stories of people losing everything. The price of a single coin can rise by thousands or fall just as fast. It's exciting, confusing, sometimes overwhelming. And yet, the question lingers, should I be investing in crypto? Is this the future of money, or just a passing trend? If you've ever felt curious but cautious, you're not alone. In this video, we're not going to hype crypto up or tear it down. We're just going to look at it clearly, what it is, why it's rising, and how to think about investing without stress, no pressure, just perspective. Cryptocurrencies can feel mysterious. There's a lot of noise, technical jargon, fast-moving markets, and strong opinions. Some say it's the biggest financial revolution of our lifetime. Others call it a bubble waiting to burst. So where does that leave regular people? People who just want to understand what's going on and whether it makes sense to be part of it. You don't need to become a tech expert or memorize blockchain terms. You just need a clear, honest explanation without pressure. In this video, we'll explore what cryptocurrency really is, why it's grown so fast, and how you can think about investing in a way that feels safe, smart, and simple. No hype, no panic, just calm understanding. By the end, you won't get a yes or no answer, but you will have the clarity to make your own decision with confidence. What is cryptocurrency really? Let's slow things down and get to the core of what cryptocurrency is, because before we can decide whether to invest in it, we need to understand what it actually is, not just what the headlines say. At its simplest, cryptocurrency is a form of digital money, but that description alone doesn't do it justice. Traditional money, like dollars or euros, is managed by governments and central banks. When you send money to someone through a bank or payment app, that transaction passes through a middleman who keeps a record, verifies the transfer, and takes a small fee along the way. Cryptocurrency works differently. It removes the middleman. Instead of one central authority managing everything, crypto is decentralized. It relies on a network of computers around the world to process and verify transactions. This network runs on a special kind of technology called the blockchain. Think of a blockchain as a public ledger, a digital notebook that keeps a secure, permanent record of every transaction ever made. Every time someone sends or receives crypto, the transaction is verified by the network and added to this shared notebook. No single person controls it, and once something is written into the blockchain, it can't be changed or erased. This idea of a secure, shared record has powerful implications. The first and most well-known cryptocurrency, Bitcoin, was introduced in 2009. It was created in response to the global financial crisis. People had lost trust in big banks and governments. The creator, still anonymous, imagined a new kind of money, one that wasn't printed or inflated by any government, one that could be sent anywhere, at any time, by anyone, with no approval needed. Bitcoin is often described as digital gold. It's limited in supply, only 21 million will ever exist, and it's designed to be resistant to inflation. Over the years, it's attracted people looking for an alternative store of value. Then came Ethereum a few years later. While Bitcoin is mostly focused on value and transactions, Ethereum opened the door to something broader: programmable money. With Ethereum, developers can build apps and agreements called smart contracts directly on the blockchain. These aren't apps like Instagram or Netflix. These are decentralized programs that run without any central control. Imagine renting a digital storage space that automatically unlocks when you send a payment, or a loan that executes itself based on code, not paperwork or approvals. That's what Ethereum and other platforms enable. There are thousands of cryptocurrencies today. Some try to solve problems like faster transactions, more privacy, or cheaper international payments. Others are experimental. Some are even jokes. This is where the space gets confusing. Not all cryptocurrencies are useful or trustworthy. That's why understanding the purpose behind a coin is more important than watching its price. Here's a simple way to think about it. Bitcoin is trying to be a better version of gold. Ethereum is trying to be a better version of the internet. Other coins vary widely and many won't last. So what is cryptocurrency really? It's a new kind of digital infrastructure. It's money that moves without borders. It's a way of recording value, ownership, and agreements without needing banks, lawyers, or third parties. It's still evolving, it's still being tested, and it's definitely not perfect, but it's a big idea. One that invites us to think differently about what money is and who gets to control it. Before investing in crypto, start by understanding this foundation, because once you see the why, the how makes a lot more sense. Why has cryptocurrency become so popular? In just over a decade, cryptocurrency has gone from a niche experiment to a global conversation. What started as an idea on an online forum is now on the front page of major news outlets, in corporate boardrooms, and on the radar of governments worldwide. So why has it caught on so quickly? There are a few reasons, and together they explain not just the popularity, but also the passion that many people feel around crypto. Let's break them down. First, financial independence. Many people are drawn to the idea of money that's not controlled by banks or governments. In some countries, inflation eats away at savings year after year. In others, access to financial services is limited or unreliable. Even in stable economies, people often feel they have little control over how money moves, who profits from it, and what fees they pay. Crypto offers a different model. You can hold your own funds, send them to anyone, anywhere in the world, often in minutes. No bank approvals, no closed hours, no freezing of accounts. This idea of owning your money completely is deeply appealing, especially to those who've felt excluded or underserved by the traditional financial system. Second, scarcity and speculation. Let's be honest, part of the popularity is financial. People see the price of Bitcoin or Ethereum rise dramatically, and they wonder if this is the next big thing. Bitcoin, for example, has a fixed supply, 21 million coins. Unlike paper currencies, which can be printed endlessly, Bitcoin is designed to be scarce, like gold. That scarcity creates demand, and demand drives price. As more people hear stories of early investors making large profits, interest grows. Crypto becomes not just a technology story, but an investment story. This creates a feedback loop. The more the price rises, the more media coverage it gets. The more coverage, the more people get curious. The more people buy in, the higher the price goes, at least until it doesn't. Because crypto is also volatile. Prices can rise quickly and fall just as fast. That same volatility that excites some investors also makes others nervous. Third, community and culture. There's something else at play that's harder to measure, but just as important. Crypto has become a movement. It's not just about charts or coins, it's about values. People are excited by the idea of building a new kind of internet, one that's open, transparent, and not owned by a few giant companies. They gather in online forums, meet at conferences, and collaborate on projects, even if they've never met in person. For many, being part of crypto isn't just about money. It's about being early to a new way of thinking. It's about freedom, experimentation, and taking control of your digital life. Of course, not everyone sees it this way, and not every project is built on good intentions, but the passion is real, and it's fueling real innovation. Fourth, institutional attention. For a long time, crypto was ignored by large institutions, but over the past few years, that's changed. Banks, hedge funds, payment companies, and even governments are now exploring how to work with or regulate crypto. Some are investing in it, others are building services around it. When big players get involved, the public pays attention. Crypto starts to feel less like a fringe idea and more like a real part of the financial future. So why has crypto become so popular? Because it combines powerful ideas, ownership without middlemen, scarcity that invites speculation, a movement that speaks to the digital age, and growing interest from institutions once skeptical. It's not just technology. It's not just money. It's a shift in how people relate to systems, control, and opportunity. Whether you believe in it fully or are just watching from the sidelines, one thing is clear: this space is growing fast, not just in price, but in impact, and that's why more and more people are paying attention. Is it too late to invest in cryptocurrency? It's a question many people ask, usually after hearing a story, someone who bought Bitcoin in 2013 or Ethereum in 2016, and now they're millionaires. The price has already gone up so much. So, is the opportunity gone? Did we all just miss the boat? The answer isn't simple, but it's also not as mysterious as it seems. Let's unpack it slowly. First, define what invest means to you. Are you looking for something that will grow steadily over time, like a long-term savings plan? Or are you hoping for a big return quickly, something that could double your money in a few months? These are two very different mindsets. If you're looking for fast profits, the truth is, you're probably too late. The early years of crypto were full of steep rises. Bitcoin went from a few cents to tens of thousands of dollars. That kind of explosive growth is rare and unpredictable. Today, crypto is more mainstream. The market is bigger, the gains are slower, the risks are still high. That doesn't mean there's no opportunity, but it does mean you need to adjust your expectations. Second, consider where we are in the bigger picture. The internet has been around for decades, but it's still evolving. Social media didn't take off until smartphones became common. Streaming video didn't really grow until internet speeds improved. Crypto may follow a similar path. We're still early in the development of the infrastructure. There are still questions about regulation, security, energy use, and real-world usefulness. Many projects will fail. Some will succeed. So in a way, it's not too late if you believe crypto will continue to grow and mature over the next 10-20 years. Investing now could be like investing in the early internet, not at the very beginning, but before it becomes fully embedded in daily life. Third, look beyond the price. Most people only look at charts. They want to know what's going up, what's next. But real investing is about understanding value. Why does this technology matter? What problem does it solve? Do I believe it will be useful in the future? If you're asking those questions, you're not late. You're just getting started. It's easy to feel like everyone else is ahead, but in truth, most people still don't really understand what crypto is. Many haven't invested at all, others have done so blindly. Taking the time to learn, think, and ask honest questions puts you ahead of the curve. Fourth, time in the market beats timing the market. One of the oldest ideas in investing is this: it's better to be in the market consistently than to try to guess the perfect moment to jump in. The same goes for crypto. You don't have to go all in. You don't have to wait for a crash. You don't have to find the next big coin. You can simply start small. Invest a little, learn, watch, and grow with the space, one step at a time. So, is it too late if you're chasing yesterday's headlines? Maybe. If you're expecting a miracle, probably. But if you're patient, curious, and thoughtful, if you see crypto as a long-term experiment with real potential, then no, it's not too late. Just remember, this isn't a race. It's a journey, one that rewards understanding more than urgency, clarity more than excitement, steady steps more than sudden leaps. So take your time and make choices that fit your goals, not someone else's timeline. How much should I invest, if at all? This is the part where most people feel stuck. You've read a bit, maybe you're curious, maybe even optimistic. But then comes the question, how much should I actually put in? The honest answer, it depends. There's no perfect number, no magic formula, but there are some principles that can help you find a number that feels right, calm, responsible, and aligned with your life. Let's walk through them. First, only invest what you can afford to lose. This advice is repeated often, and for good reason. Cryptocurrencies are still young. They're volatile, they rise and fall quickly. Even the most established coins like Bitcoin or Ethereum have seen their prices drop by 50% or more in short periods. So the first and most important rule is this: don't invest money you need in the short term. Not your rent money, not your emergency fund, not the money you're saving for next month's bills. Think of crypto like planting a seed in unfamiliar soil. It might grow into something strong, or it might not take root at all. If you wouldn't be okay watching that money shrink or even disappear, it's too much. Second, treat it like a seasoning, not the whole meal. When building a balanced meal, you don't fill your plate with just salt or spice. Those things add flavor, but they're not the foundation. The same goes for investing. Your core should still be in safer, more stable assets. Cash savings, index funds, retirement accounts. Crypto? That's the seasoning. Just a small portion, something like 1 to 5% of your total investments. If crypto grows, that small percentage could still make a meaningful impact. If it doesn't, it won't derail your entire financial future. It's about balance, about protecting your peace of mind. Third, know your own risk comfort. Some people are naturally more comfortable with risk. Others lose sleep over the thought of their investments dropping. Neither is wrong. What matters is being honest with yourself. If seeing big swings in your portfolio makes you anxious, keep your crypto exposure very small, or none at all. If you're curious and open to risk, a bit more might be fine, as long as it's still a thoughtful, planned amount. The goal isn't to be fearless. The goal is to be clear. Investing should feel responsible, not like gambling. Fourth, build, slowly and intentionally. You don't have to invest everything at once. You don't need to time the perfect dip. You can start with a small amount. Watch how the market moves. Learn more. Then, if it makes sense, add a little more over time. This approach, called dollar cost averaging, is used by many thoughtful investors. It simply means investing small, consistent amounts over time instead of one big lump sum. It reduces the stress of trying to buy the dip or catch the next wave. It turns crypto from a bet into a process. Fifth, remember your goals. Why are you thinking about investing in crypto? Is it to build long-term wealth? To explore a new technology? To not miss out? Be honest and write it down, because your goals should shape your decisions. Not someone else's excitement, not the headlines, not the charts. Investing in crypto doesn't need to be dramatic. It can be quiet, intentional, and deeply aligned with your values. So how much should you invest? Enough to stay curious, not so much that you feel anxious, enough to be exposed to something new. Not so much that it distracts from your bigger picture. Start with understanding, move with intention, and always protect your peace. Because smart investing isn't about chasing returns, it's about making decisions that help you sleep well and live well. What's the smartest way to start? By now you might feel a little more confident. You've learned what crypto is, why it's popular, and how to think about investing in it responsibly. But even with that understanding, one question remains. If I do decide to invest, what's the right first step? The world of crypto can feel overwhelming at first. There are thousands of coins, dozens of apps, and endless advice, but you don't need to do everything. You just need to do something small and do it well. Let's simplify it, step by step. Step 1. Start with education, not excitement. Before you buy anything, take time to learn. Watch calm, well-explained videos. Read guides from sources that don't promise quick riches. Learn the difference between Bitcoin and Ethereum, between a blockchain and a token, between a wallet and an exchange. You don't need to know everything, but knowing the basics helps you avoid most mistakes. Imagine learning to drive. You don't start on the highway. You start in a parking lot, slow, careful, and aware. Treat crypto the same way. Study before you steer. Step 2. Choose a trustworthy platform. To buy cryptocurrency, you'll need to use an exchange, a service that lets you convert regular money into crypto. Look for platforms that are well-established, regulated, and transparent. In the US, examples include Coinbase, Kraken, or Gemini. In other countries, there are local options too. Check their security features. Read reviews. And avoid any platform that promises guaranteed profits or seems too good to be true. Remember, in crypto, where you buy is just as important as what you buy. Step 3. Start small. Really small. You don't need to invest a lot. Start with an amount that feels almost boring, maybe $10, maybe $50. This isn't about making money right away. It's about getting comfortable with the process, how to buy, how to track your holdings, how to move coins to a wallet. It's like trying a new fitness routine. You don't lift the heaviest weight on day one. You try a few small movements, then you build up strength. Same here, start small. Learn by doing. Step 4. Focus on the major coins. With thousands of cryptocurrencies out there, it's tempting to chase the next hot coin. But most of those coins will fade away. Some are outright scams. For beginners, the smartest approach is to stick with the ones that have stood the test of time. Bitcoin, the original, focused on security and scarcity. Ethereum, a platform for smart contracts and decentralized applications. These are the foundations of the crypto space. They may still fluctuate in price, but they are more widely understood, supported, and adopted. Avoid meme coins. Avoid celebrity-endorsed coins. They might look fun, but they rarely last. Stick with substance. Step 5. Practice good security habits. Crypto gives you more control over your money, but also more responsibility. If you keep your crypto on an exchange, enable two-factor authentication. Use strong passwords. If you want more security, you can move your crypto to a personal wallet, either software-based or hardware-based. That means you control the private keys, not the platform. But be careful. If you lose your private keys or seed phrase, you can't call a bank to recover your money. It's gone, so write things down carefully, store them safely, and never share them with anyone you don't trust completely. Step 6. Be patient, be steady, be boring. It's easy to get caught up in price movements, up 10% today, down 15% tomorrow. But long-term success with crypto doesn't come from reacting emotionally. It comes from staying calm, keeping your goals in mind, and tuning out the noise. You don't need to check prices every hour. You don't need to trade daily. You don't need to impress anyone. You just need to make thoughtful decisions over and over again. So what's the smartest way to start? Learn before you act. Choose safe, simple tools. Start small. Focus on the strongest assets. Protect your money with smart habits. And move slowly, on purpose, because the smartest investors aren't always the loudest. They're the quiet ones, learning, adjusting and growing, without the drama, and that's a good place to be. Cryptocurrency is complex, but it doesn't have to be confusing. It's more than a trend. It's a tool, one that offers both potential and risk. We've explored what crypto is, why it's popular, and how to think clearly about investing in it. Start with understanding. Invest only what you can afford to lose. Focus on the long term. No rush, no hype. Just thoughtful steps forward. Clarity over excitement. Steady over sudden. That's the simple way. If this video helped you think more clearly, feel free to subscribe or watch another one. We keep it simple here. No noise, no pressure. Just honest ideas to help you live and invest with intention. Learn, focus, improve. The simple way.